Hey everyone, we got some more big news out of Apple as the company is slashing prices on its iPhones in China to help increase sales. I'll go over the details of that announcement, precisely how much it's cutting prices, and how sales are going in the region for Apple. I'll also remind everyone about the consequences and ramifications of slashing prices and what it could mean for investors longer term. So let's take a look at the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Apple has launched an aggressive discounting campaign on its official Tmall site in China, offering discounts of up to 2,300 yuan or $318 on select iPhone models. Those are big discounts. The discounting comes as the US tech giant seeks to defend its position in the high-end smartphone market, where it faces increasing competition from local rivals such as Huawei. That's the key there. That's what I wanted to elaborate on with competition and what it means for investors. So, as I've been talking about with nearly every company that I cover, when they make an announcement like this or when they aim to lower prices in this magnitude, they're not going to be alone in the market. What I mean by that is they're not going to be allowed to just make these kinds of moves without facing consequences. So, in this market in particular, their competitors are going to realize what Apple is doing and they're going to formulate a response. Now, that response may not be directly the same way that Apple has launched its campaign, right? So, Apple has chosen to cut prices so that it can gain market share. Okay. So, its rivals are noticing that move, and now they're going to formulate a response to Apple's move. It might also be a price cut, but it might be something different. It might be an increase in advertising, it might be an increase in supply, it might be an increase in hiring. In some way, Apple's competitors are going to respond to Apple's decision in lowering prices to gain market share because they're going to see this as an attack, right? You're trying to take market share, which is going to come at their expense. They're not going to sit back and just allow this to happen without posing some kind of response. And that response is for two reasons. Number one, and the primary reason, is the competitors in the industry need to send a signal to Apple to make Apple understand that they're not going to just let this happen. They're not going to sit back and let Apple try to take market share without responding. So they need to send a message so that Apple knows that in the future, if they are to try to take market share, they're going to face a response. And the reason for that is they want to discourage Apple from taking these kinds of moves. They want to discourage competitors trying to take market share. Okay. So that's the one reason. The second reason is the actual market share. They don't want to let Apple take the market share because then they can keep those customers longer term. And when they go to upgrade, they'll likely stick around with Apple. But the primary reason is to discourage competitive actions in the future. And you see this across the board for decades and decades and decades in industries where there's competitive pressure. And that's bad news for investors because when Apple takes a move like this, I discussed that their competitors are likely to respond. And then when their competitors respond, what's Apple going to do? What's Apple going to do? Okay. So is Apple going to fire back another response in an attempt to say, we got your message that you're trying to protect your market share, but we are more powerful than you. And we can just keep cutting prices and take more and more market share until you understand that we are more powerful than you. And the competitors may come back and say, well, we don't care that you think that you're more powerful. If you want to have a race to the bottom, let's go. Let's both keep cutting prices and let's play a game of chicken and let's see who's going to go lower. Okay? And that's really dangerous for investors. That's really dangerous for investors. You're seeing that happen in the electric vehicle industry in China, where there's just a race to the bottom. Everybody's cutting prices. Well, I shouldn't say everybody, but many of the industry participants are cutting prices, and it's just keeping getting lower and lower and lower. Participants are cutting prices, adding new models, increasing advertising, hiring more salespeople, cutting prices, more investments, and the industry's profitability is just moving downward. That's where it gets really dangerous, and you're seeing that lower profit margins, lower cash flows, and this is what you want to avoid. Now, the smartphone industry is not anywhere near the troubles in competitive rivalry as in the electric vehicle industry, but this is how it starts. It starts with these kinds of moves. And, one company makes a move, another company retaliates, and if they want to escalate, and then it keeps going, and then it gets to a position like it is in the electric vehicle industry. So I'm always very sensitive to increasing pricing, increasing competition, because of the dangers that it leads to. So while this is a minor move, right, it's just in one market in China, and it's only for 8 days from May 20th to May 28th. And so it's still contained, but I'm now more aware of what's going on here, and I'm going to be observing for how its competitors are going to react. Now, Apple's sales in Greater China have been declining, 16.37 billion in sales in the latest quarter, down from 17.8 billion in the same quarter last year. And then in the first two quarters, 37 billion, down from 41.7 billion. So Apple's been losing market share because of the increasing competition. And the competition has been increasing supply with new models and offering lower prices. So this is actually Apple's response to that competitive pressure. The iPhone sales have also struggled for Apple, 45.9 billion in sales, down from 51.3 billion in the same quarter last year. So Apple is facing increasing pressure to revitalize growth in this segment and this product. Now, the good news for Apple stock investors is that Apple's shipments in China increased by 12% in March. And that was a big improvement from the first 2 months of 2024, when the company experienced a 37% slump in sales in the region. So a better performance in March compared to in the first 2 months. Still, this increasing discount is something to be aware of and look out for how the competitors respond to Apple's moves. If there's signs of increasing fierceness of competition, it could be something to look out for. But keep it in context. Apple's sales from China, all product sales in China, are still less than 20% of the company's overall revenue, and this is just with the iPhone. So it's not a very big part of Apple's business. Still, it's an important part of Apple's business and something to keep an eye on going forward. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.